Hi there, welcome to Kneppy Invest and welcome to the 29th of April 2024. We have about an hour of trading left today, so I'm recording this video at 3:08 p.m. and we've had a fairly good day on the ASX. Unless you're heavily undiversified and heavily into mining companies, resources only up 0.36%. But if you love your small caps, probably have had a good day, up 2.1%, the XSO, and all tech up 1.54%. So pretty good day on the markets, and this was to be expected because of the pretty good day we saw on the American markets on a Friday, led by Alphabet. And I have no idea what's going to happen on the American markets tonight. Who knows? So tomorrow could be down big, could be up big, could be flat. And I'm covering all the bases saying all those, or could be down a little bit, up a little bit. Anyway, so the agenda for today's video is I'll go through a couple of interesting tweets talking about this week, how wild it might be from the Kobisi letter. And then Bar Chart had an interesting tweet on the worst performing family of funds in the past decade. And I'm pretty sure they did this tweet to have a bit of a go at Cathie Wood. Woods, is it Wood or Woods? And her ARK Invests. And then we'll have a look at the top 5 announcements of the day. And drum roll, top 5 announcements of the day include Megaport, Brainchip, Vection Technologies, and Experience Co. and Rincon Resources. Now, those last 2 companies, there was quite a few possibilities that could have become the last 2 companies in my top 5 announcements of the day. The first 3 were set, and I was choosing different companies for the last 2. So some of those companies that did not quite make it, I might go through, quickly go through those companies. For instance, Veeam, Metro Mining, BetMakers, Boss Energy, Ansarada, Medical Developments, and SiteMinder, and Wingara as well. But I decided upon Experience Co. and Rincon Resources. And then we might finish the video looking at some charts. Possibly Crisis Corporation, share price up 7.8%. Integrated Research, maybe also Mesoblast, if I remember. Okay, so first thing I'm going to do is have a look at these interesting tweets. And Kobe SC Letter has done it again. This week is going to be absolutely wild. Now, I think they're being a little bit dramatic right there. However, the weather in the Midwest of the United States has been quite dramatic in the past 4 days. It is that time of year where they do see increase in tornado or increase in likelihood of tornadoes, and they've had about 3 or 4 days of pretty extreme and some pretty fierce tornadoes, Nebraska, Iowa, and Oklahoma. So the weather's been wild, and possibly the week in equity markets in America will be wild as well. So the Fed will react for the first time to rising PCE, PPI, and CPI inflation data. What are they going to do? I did read somewhere the other day that there's now a 50% chance that Australian interest rates will rise. The Reserve Bank will raise interest rates. 50%, or maybe that was for American, but maybe instead of seeing interest rates drop, we're going to see interest rates rise. And how will that affect the economies of the world? I think if central banks do raise interest rates, there's an increasing chance we're moving into recessions. And in an odd way, that's probably what they want. In an odd way. They won't say it, but in a way, that's what they want, because if they didn't want that, they wouldn't be raising interest rates, would they? Anyway, this includes Fed Chair's Powell Q&A after first 2-month increase in inflation since September 2023. Meanwhile, this is where it gets even more interesting, over 20% of the S&P 500 will be reporting earnings, including Apple. I went through some of these companies in one of my videos. I think it might have been yesterday, the 28th of April. My technical analysis video went through many of those companies that will be releasing their earnings this week. So a busy week when it comes to earnings. Or before we get the April jobs report on Friday, which could be really important. This could be really important because if the jobs report on Friday is really good, really bearish or bullish, there's actually an increasing chance interest rates might go up. Because one of the reasons they want to increase interest rates is to increase unemployment, which sounds absolutely bizarre, but they are obsessed, maybe not obsessed, but they absolutely believe that the reason we have inflation is because of wage increases or wage rises. So to really put a damper on wage rises is you increase unemployment. It's all about demand supply. They absolutely believe that. These economists, they're in charge. And there is some evidence that they never had to raise interest rates, that inflation overall would come down if they didn't do that. Now, I'm not sure if I believe that, but there are some arguments in regards to that. And then they go on about geopolitical tensions. To be fair with you, I don't think that matters much in the medium term. In one day, you might see the markets rally or drop a bit, but I think geopolitical tensions don't really affect the markets all that much. Just about every major headwind is converging this week. What are your predictions? So should I keep paying bills or not? A lot of volatility, but ultimately up to continue this blow off top before a massive correction. Everyone has their opinions on what the market is going to do. I have no opinion. I have no idea. So many bears, so many bulls out there. I have no idea. Okay. That was interesting. Fed will cut second half 2024 and deal with inflation in 2025. I don't know about that. We are getting close to black swan event. Well, the closer we get to a black swan event means it's not really a black swan event, is it? Black swan events come out of nowhere. We just have no idea they're there. So you can't really think there's a black swan event, because just by thinking there might be a black swan event means it's not going to happen. It's no longer defined as a black swan event. I'm being pretty silly now. Okay, so this is bar charts, having a little bit of go at Cathie Wood. So Cathie Wood's ARK Invest, it is Wood without the Woods, because that would have been Cathie Wood's. ARK Invest is ranked as the #1 wealth-destroying fund family over the last decade, wiping out more than $14 billion of capital, more than double the second-ranked wealth-destroying fund family, which is Crary Shares. Now, it's Credit Suisse there. Global X Funds, Pro Shares, Barclays, Advisor Shares, Cromwell Funds, kneppyinvests funds. Oh, sorry. That's not there. ETFMG, Round Hill Investments. So most people have heard of Cathie Wood and her ARK. And I would say there's probably going to be someone backing her up here. Oh, there is. Third comment. ARK will be #1 fund family for creating wealth. Just wait for it. It's really interesting because on the weekend, I had a look at, went to Cathie Wood's website. And I saw there was a research report on Tesla, which I found really interesting. And what they do is they have a bear case and a bull case for Tesla. They probably do this for all companies. And I had a look at the bear case, and I was like, their bear case for Tesla will be most people's ultra bull case. And that's why they have a ridiculous valuation for Tesla, is because they're not being conservative enough when they're thinking about the bear case. It was quite remarkable when I actually did have a look at that report, which was about a year old, but still, their bear case was, if it did happen, it would be, I think, maybe a 3% chance, 2% chance, and their bull case was probably 0.0000001% chance of happening. So they're hyper bullish on some of the companies they do own, and way too bullish. And I think that is one of their biggest problems. I have gone through quite a few of their reports, and I do think they're too bullish, a little bit too bullish. And when the market is doing really well, that's okay. That's why they did really well a few years ago. That's how she became famous, is she was ultra bullish on some of these companies that were not profitable, that all had their futures 100 years in the future. Anyway, that was pretty. Paul Kent is trending on Australia. I wonder why that is. Yes, pretty sure he's Durant. I wonder if Phoenix got knocked out. I wonder if Phoenix got knocked out of the NBA. Let's have a look at Durant. Yep, there we go. Kevin Durant gets swept in the first round again. I am not. So my team is the Oklahoma City Thunder. For those who don't know anything about NBA, Kevin Durant used to play for the Thunder, and then he left and went to the Warriors. It was one of the dumbest, maybe not dumbest, pretty smart for him, but one of the crappiest moves you could ever make. And it's just amazing that Thunder are absolutely good now, and they're a very young team and extremely exciting. And Kevin Durant is now in Phoenix, and they've been swept by the Minnesota Timberwolves. Okay, this is not a sport channel. Maybe it could be. So let's have a look at the ASX today. I've already talked about, I think I've talked about how good it's been. So a really good day on the markets, apart from mining, although mining is up a little bit. So let's have a look at the sectors and indices. So real estate up 1.91%. So hopefully you've got your money in real estate. I have my house. That's how I think of my house. It's my initial investment was my house. So I don't really understand why people have the house and then they go and double down on investment properties diversify. And I did research many, many years ago, and stock market is the best way to grow wealth, in my opinion. And it has done a wonderful job for me. And then I saw these people who have got investment properties and they're highly in debt. I have no debt. Okay, telecommunications, IT done really well, healthcare, everything's done well except energy, negative 0.05%. So hopefully you don't have 100% energy in your portfolio. Otherwise, you've probably done a pretty good day. And small odds, yeah, everything in the indices doing really well. ASX 20, I'm going to look at let's have a look at the ASX 50. No, we'll have a look at the ASX 20. Which companies have done well today, which companies have not. 5 companies have fallen. Those companies are Aristocrat, Santos, James Hardie and BHP, and Woodside. So a couple of energy companies there. The other banks have not done as well. And the best performing company in the ASX 20 is Goodman Group, which I'm absolutely ecstatic about because I'm a shareholder. WiseTech's coming in number 3. So 2 holdings I do have in this list, plus CSL. I do have CSL, the best performing companies. So go Goodman Group. I just like the potential of Goodman Group. Let's have a look at the ASX, the odds. Let's have a look at the odds. What companies have done well here? Let's have a look by change. So Pacific Smiles has gone through or is undergoing a takeover offer, I think. Mesoblast, Veeam, which almost made it into my top 5. In fact, I did put it there for a while. Maybe I should have included that, up 12%. And Crisis Corporation, I'm going to have a look at their chart. Boss Energy almost made it into my list. Oh, jeez. Okay, so I'm veering a little bit away from what I wanted to do. So I've had a look at the indices. Everything's up. So energy's down a little bit, but nothing too serious. Now let's have a look at the best performing companies and the worst performing companies. Let's start with the top losers today. Okay, this is by percentage change, and I can't remember. I did see Whitebark Energy released some sort of announcement. I did have a look at that. But low turnover, so there's no point. BetMakers almost made it onto my list, down 18%. I should have a look at BetMakers because it is down a fair bit. I actually am a little bit surprised by that. So BetMakers, I'm just going to mark that so I don't forget. I do have a bad memory. I took one of my pets to the vet today and I left something on the counter that I needed to take home and I completely forgot about it. And in fact, I put it down. I went, don't forget this thing. It's very important. And I forgot it and had to go back in later. So BetMakers, so I've circled it, BetMakers. Anything else there? No. And then my market, Brainchip, coming in number 2 on the top announcements of the day. And you might say, well, if it's down by 6%, why is it top? And top is, in this reference, top means the most price-sensitive announcements. Maybe not. The most intriguing announcements to me, and it could go, the share price could go either way, up a lot or down a lot. And otherwise, BetMakers is there, Next Science, Freelancer, Lark Distillery. So nothing else. Vinyl Group has been, not in the news, but has been a little bit of chatter in this channel about Vinyl Group, down a fair bit. That's after a pretty big run. And when I say run, I don't mean running or jogging or walking. I mean run as in it has moved up a lot. Okay, so a few interesting companies in the top losers. Not surprised Brainchip is there. I'm a little bit surprised about BetMakers, but we'll have a look to see and try to understand why the market does not like BetMakers. Now let's have a look at top gainers. Multistack. You might think Multistack is up 250%, so I should have Multistack as number 1. But look at the turnover, $28. So someone decided they just had to buy some Multistack shares, and they spent $28 to lift the price 250%. I might have a look at Multistack just because this is interesting that it's up 250% on probably one trade. It's probably one trade. Canterbury Resources did get a price query from the ASX, so they have released no interesting announcements, so I can skip those with that company. And otherwise, Wingara almost made it onto the lists. It was one company that was in contention, up 21.4%, but on low turnover. So even though the share price is up a bit, 29%, it's on low turnover. That company released their Appendix 4C. There's Rincon Resources again. So the main reason I have Rincon Resources at number 5 is because the share price is up a lot today on high turnover, and they did receive a price query. So I do want to discuss Rincon Resources a little bit more in today's video. I did discuss that company in my either last 2 videos, possibly both videos, but definitely have mentioned Rincon Resources. I won't be trading that company, by the way. And now by market cap, Boss Energy, yeah. So Boss Energy almost made it to list. Mesoblast didn't. It's just day trader's dream right now, up past $1. Star Entertainment Group, what's happening there? I don't remember. Oh, they did release an announcement, Star. So they have a new chairman. Now, when a company announces they have a new chairman, I don't get excited about that. Orabanda, Strike Energy did release something. So, gee, there's all these companies that weren't even in contention that are on this list. And then we got some copper companies, 29 Metals, there is Resources, which is understandable because copper's doing really well. Veeam, there it is, Veeam, almost made onto my list. Metro Mining almost made onto my list, up 12.8%. Findi, good day there. And there's Experience Co, which did make it onto my list at number 4. Okay, so that is the ASX today. Now let's have a look at the top 5 announcements of the day, starting at number 5, and then I might touch upon some of these other announcements. So coming in number 5, we have Rincon Resources. Share price up 23.2%, and the company did receive a price query from the ASX. The reason, or one of the reasons they received a price query, is because the share price has been on absolute tear in the past week. So on the 19th of April, which was just over 10 days ago, share price of this company was 2.7 cents. Now it's 8.5 cents. We've seen days where the share price has risen by over 20%. 3 of those days, 22%, 36%, 68%. The other day, share price was down 8.9%. Now, they did mention this gravity anomaly or something. Now, I don't understand this announcement at all. And this, to me, Rincon Resources is just a story stock. Now, I have done a little bit of research in terms of my performance when it comes to story stocks versus small caps that are profitable or verge of being profitable, or non-story stocks or non-story small cap companies, quality companies, and trading. By far, I perform much worse when I buy story stocks. That's one of the reasons why I'm getting out or trying to get or decrease my holdings in story stocks. I used to love story stocks. I used to love the story, and Rincon Resources is a story stock. Now, just because I would never trade this company or even buy this company because it is a story stock. It has a story. Gravity anomalies, no idea. And again, thank you, Comsec, for opening up, taking so long to open. I can continue ranting on. So just because I won't trade, or because I don't have an understanding of this particular announcement, doesn't mean you don't have to be interested in this company. So one of the reasons why I'm showcasing this company is because a few viewers have mentioned this company, and they've had a pretty good week. So this is the announcement that really caused a little bit of interest, really increased interest in this company. Bullseye Gravity Target. Did they mention anomaly? They do mention anomaly. Recently completed detailed ground gravity surveys outline multiple new anomaly high targets. So I have no idea what this is. This could be the first stage in the sort of the exploration process. A gravity anomaly or some sort of anomaly, then drilling, and then next they have to do what do they call it, where they have to see if the project could be feasibility study, all those sort of things. And finally, they might get to the point where they go, wow, this project could be feasible. That could be 5 years down the road. So we are seeing some initial excitement in this company right now. How long that excitement lasts, I have no idea. But again, this is a story stock, not for me at this point in time. But if you like the risk, and if you really understand what this announcement is saying, then go for it. Now, in the ASX price query, so if you don't know what a price query is, so share price has gone on a bit of a tear. Now, I don't know why they received this, because it's pretty obvious that this gravity anomaly was the cause of this initial interest. That was only released only a week ago. 7 days ago, on Monday, last week. So I'm not sure why they released this, because that was price sensitive. And the share price has continued to rise. And let's have a look what the ASX says. The ASX says change in the share price of this company from 4.1 cents on the 24th of April, 2 days after they released that price sensitive announcements, to an intraday high of 9.9 cents. And usually the company gets 3 questions. In this case, it's 5 questions, but I look at the first 3. The first question is, do you have, this is the ASX asking the company, do you have any sort of information that could be price sensitive that you have not released to the market? Typically, and I'd say this is true for 99% of occasions, the company replies, no, we are not aware of any information that has not been announced. And then because they say no, question 2 is not applicable. Then question 3, the ASX is asking, if you don't have any price sensitive information that you have yet not released to the market, if that makes sense, is there any other explanation that you have that could explain the share price movement? And for Rincon Resources, all they said was refer back to our announcement on the 22nd of April. Duh, ASX people, that's probably what's causing the interest in this company right now. They also mentioned something about the 24th of April activities report, but that sort of just follows on through from that initial announcement, it seems like, anyway. So a really interesting price query that was received by Rincon. I'm not sure what the ASX is talking about. So RCN is the T code. Wait there. RCR. Why did I think it was RCN? RCR is the ticker code. And this is the chart. This is the 1 hourly chart. Just look at that beautiful. So 1 hourly chart looks pretty good. And some really big volume. The peak of the volume was this morning. In the first hour, that was a peak in volume. And the share price has been a little bit volatile since then. Wouldn't be surprised to see this is the top. So share price got as high as 10 cents today, has pulled back to 8.5 cents. I think potentially today is the top. Today is the top. The highest volume was yesterday or on Friday session, and we have seen a little bit of selling today. And I think what happened, or what's happening today, is just day traders. They saw what happened on Friday, and they've got interested in this company. And again, I think I mentioned this when I was talking about Rincon Resources in a previous video. The sign happened at the start of January. The first sign, increase of volume. Volume precedes price action sometimes, and then we have seen a massive volume on an interesting announcement. And this could be a breakout, but not my preferred breakout, because I like breakouts on positive financial news. So interesting times for Rincon Resources. But moving forward, no idea. Let's have a look at the 1 minute chart. I'll probably be looking at 1 minute chart for this. And just based off the 1 minute chart, there's a little bit of weakness right now. Yeah, a little bit of weakness right now with Rincon Resources. Anyway, so let's go to ASX announcement, top announcement number 4, which is Experience Co. Up 16.1%. And the company released 2 things today, which, if it's here, come on, ComSec. So Experience Co. did release 2 announcements today that were interesting. The first announcement was a trading update from the company. I think they released 2 announcements. Here it goes. So, no, 1 announcement. Q3 trading update. So a trading update in itself can be really intriguing, interesting. A few other companies today did release a trading update, including Midway, Boom Logistics, and there might have been another one in there as well. Stockland Group also released a trading update. But most of those companies just said things are going as planned. But Experience Co. also released an announcement of a strategic review. which typically means the company is not moving in the right direction or the direction the management wanted. Now, the trading update did not really pique my interest all that much, although it was positive. Things are moving in the right direction for this company. But what really piqued my interest was the strategic review. And I'll get to that in a second. So this is a trading update in a sort of a presentation style. Here is the numbers. So everything's up. So they have, if you don't know what this company does, they have skydiving, adventures, experiences in mostly North Queensland. So it's about tourism. It's all about providing interesting things, entertainment stuff for tourism. Not only local tourism, Australian tourism, but also international tourism. And everything's up. So sales revenue from 28.1 million to 35 million, up 24%, comparing the previous corresponding period. In year to date, up 22%. And unaudited EBITDA, not sure what U over EBITDA is, at 4.9 million in the third quarter, and so far $12 million for the year to date. So things are moving in the right direction. April 24 trading, operating momentum has continued in April, with all operating segments seeing volumes consistent with Australian and New Zealand school holiday trading. So it seems like things are moving in the right direction for Experience Co. They also talk about skydiving, adventure experiences. Not sure what that does. Is that like rafting, that sort of thing? And they also talk about tourism here. Talk about Australians inbound demand recovery continues. Different countries here, how it's trying to get back to pre-COVID-19 levels. Okay, so in itself that was okay, and this is all their brands, I suppose. It's actually quite a few here. Not only there's a bit of New Zealand stuff here. Southern Alps Skydive, Wanaka, New Zealand, Daintree Tours, Reef Magic, Dreamtime Dive and Snorkel. So yeah, and Fitzroy Island Adventures. Anyway, the thing that really caught my eye when it comes to this company is in this particular strategic review, which they also include a trading update, by the way. So very strong earnings growth, strong revenue growth, so nice wording there, is the strategic review. And it's just the first line here, which got me. The board believes that Experience Co. is undervalued by recent prices at which its shares have traded on the ASX. Now, if the management of a company believes a company is, or their company they are managing is undervalued, do a share buyback. That is what you should be doing. You don't need a strategic review. Do a share buyback. Now, they also mentioned something else here. So with the objective of maximizing value for all Experience Co. shareholders, share buyback is the thing you should do right now. If you believe the company is seriously undervalued, share buyback creates significant value for shareholders. The strategic review will investigate a range of alternatives, including potential change of control transactions. So this is a case where the board says, or the company or the strategic review says, well, if you list on another exchange, maybe you could, or if you delist on the ASX, maybe you could provide value for shareholders. No, share buyback, share buyback, share buyback. Anyway, so yeah, the company is performing well, it seems like, and they're doing this strategic review, and they should be doing a share buyback without doubt. And the share price is up 16%. The market likes it. So let's have a look at the chart for Experience Co. EXP. Have a look at the weekly chart. You'll be able to see how wild the ride this company has been. Everything's trading views now slow. Here we go. So let's have a look at the weekly chart for Experience Co. So yeah, share price before pre-COVID-19, back in December 2017, was as high as 88 cents. Got as low as 4 cents in March 2020, which actually makes sense. And there was a nice uptrend there, nice recovery. And since then, the share price actually has been in a downtrend, which is interesting because based off the trading update, things are going really well for this company. So I could sort of understand what the market or the management is talking about here. There is potential. This company is undervalued. Market capitalization 117 million. I'd have to have a closer look. I have not had a look at this company. I just know what they do, or sort of what they do. And so the weekly chart looks bearish. The daily chart, even with today's chart, looks pretty bearish. Some nice volume coming through. So yeah, if the company is undervalued, significantly undervalued, share buyback. Share buybacks create so much value if the company is truly undervalued. One of the best ways to create value for shareholders is to do a share buyback. And I have seen some investors in Australia just hate share buybacks for some reason. But it's really common in America, and that's how a lot of companies create value for the shareholders over there. So share buybacks is the way to go, experience co-management. Maybe I should become a strategic reviewer person. Anyway, the chart actually does not look good. I'll say that. The chart does not look good. Share price has increased from 13 cents at the low a week ago up to 18 cents, but who cares? Anyway, maybe Experience Co needs a closer look because it does look interesting based off the trading update. Coming in number 3, we have Vection Technologies. So this company is into virtual reality and augmented virtual reality, doing stuff for many different sectors. Well, I had a look at this company. Appendix 4C maybe a year ago, and I went, the margins in this company are absolutely horrible. They had like $9 million receipts, and the manufacturing costs were $9.5 million. So just manufacturing costs alone were higher than the receipts. Now, 1 quarter does not mean much. So having followed this company really closely. And the company did release their Appendix 4C today. Share price up only 8%, down 2.7 cents. So share price did get to a high of 2.8. But this Appendix 4C is the sort of Appendix 4C I am looking for each and every quarter. Now, again, one quarterly report does not mean or equate to a trend. If this is the start of a trend for Vection Technologies, this could be an exciting time for this company. Integrated XR, is that XR? So if you don't know what this company does, I've sort of mentioned it before, but they should have an about section here, and more than likely, about section is probably all over the place. About Vection Technologies, let's see what they say. Growing enterprise-focused company that helps businesses bridge the physical and digital worlds. We help organizations leverage the 3D data via powerful extended reality. That's what it is, extended reality. It was augmented. Now it's extended reality. Interfaces that foster collaboration. Maybe extended reality is the same as augmented. I have no idea. So these XR interfaces that foster collaboration and learning, grow sales, and more. Okay, so it has to do with virtual reality, or in this case, extended reality. Still don't know what that means. You'll notice if you have a look at some of the people on the board, there's an Italian bias here, or Italian flavor, and maybe not bias. Gianmarco Biaggi, Gianmarco Orgononi, and Damien Banks, which is not that. And then we have Australian based. So I wonder if this company has a bit of a, and you can see some of the global offices. There's at least three offices in Italy. So I wonder if this company was originally started in Italy. Okay, so the most important thing here is the Appendix 4.6. A lot of commentary that I should go through because this did pique my interest. In fact, this could have been number 1. Here we go. Virtual reality, augmented reality, mixed reality, artificial intelligence, metaverse, ICT infrastructure, chaos. Where's XR? What is XR? Maybe they go through what XR is here. Anyway, so here is section 1 of their Appendix 4C. So $11.8 million of receipts, $6.1 million in product manufacturing and operating costs, only $1.4 million in staff costs. I do like that. And the company was operating cash flow positive in this quarter by $4.1 million. Now, the next thing I should tell you is the market cap of this company is something like $30 million. Right on $30 million. Okay, so if this company is operating cash flow positive by $4.1 million, how much cash are they generating in the business when you take into account capital expenditure, intellectual property, which is the highest cost? Capital expenditure is fairly low, but intellectual property is $738,000. So even taking into account that, they were free cash flow positive by about $3.4 million. What are they doing with that $3.4 million? That's the other question. They do have some debt. So that is one thing I don't like about this company, is a little bit of debt. But if they can repay that debt, and it seems like that is what they focused on here, they have repaid about $1.3 million of their debt. And let's have a look at section 7, their debt. Actually, before that, cash on hand, $7.7 million, has increased by $2.2 million. So let's have a look at the debt. They do have $8 million of debt. So they're almost zero debt, or almost net cash, not net debt. So things based off this one quarter, are moving in the right direction from Vection Technologies. Next, and I'll just show you if I can, this might take a while. Let's go back a year. Let's go back to October 2022. So there's one quarter in their history that I still remember this going, nice receipts, but look at that spending. Ridiculous spending. Their product manufacturing and operating costs were just too high. I did not like their margins. And that would probably say their gross margins were really low at that point in time. And maybe there was a reason behind that. And this was a stage where the market absolutely selling off in the company. So it wasn't that quarter. Maybe it was just 1 year ago. Or maybe it was a little bit more than 1 year ago. Maybe I'm thinking about 2 years ago. Yeah. In fact, I could easily discover this by going to my spreadsheet, put in VR1, and there would have been a quarter here. Maybe it was 2022. Yeah. Let's go all the way back to January 2022. Oh, we won't be able to see that unless we go to this. So January 2022. Whoops. So I wonder if this was it. No, that was not it. Anyway, there was one quarter sometime in this company's past where they had a significant amount of receipts. It was pretty high receipts. I thought it was like $9 million, but according to this, they have never had a quarter with $9 million of receipts. So this was a record quarter. $8.2 million receipts in the June quarter, $8.2 million again in the June quarter. Maybe it was the June quarter last year, which I thought it was longer than that ago. So let's have a look at this in July. And we can see yeah, it was this quarter. Okay. So it wasn't $9 million receipts and $9 million in product manufacturing operating costs. So it wasn't that long ago. So this was less than a year ago. So $8.2 million in receipts and $9.4 million in product manufacturing operating costs, and operating cash flow negative by $3.4 million. So at this point in time, the market absolutely hated this company. You can see that in the share price, actually. So let's have a look at the chart for this company. At that point in time, last year, the share price, a well-defined downtrend. I think the share price has found a bottom. I think we're going to see it a consolidation period, but we need to see, I'd like to see the share price pop up on a really good financial report. So hasn't quite done that today, but this is a really intriguing financial report from this company. And that's why it's coming in number 3. It could have come in at number 2 or even number 1, but very close. So I will be paying much more attention to this company just based off this Appendix 4C. Probably should tweet. Didn't do any tweets today because I had to take the dog to the vet. Coming in number 2, we have Brainchip. Brainchip down 5%. Okay, maybe this should come in number 3. Should have reversed this one and Vection Technologies, to be honest with you. But I wanted to look at Brainchip because whenever Brainchip releases Appendix 4C, I am intrigued by their receipts. So the period from December 2023 to the end of March 2024 marked a quarter of significant transformation and growth for the company. Well, that's fair enough that you've stated that. Let's have a look at the numbers. Receipts to customers, $90,000. Operating cash flow negative $4.4 million, which is not a surprise because $90,000 in receipts. So I'm still waiting for this company to hit an inflection point. I'm just waiting for this company to bring any sort of revenue, cash receipts in the front door. I'm still waiting. So let's have a look. I haven't done a graph for this company at all, but let's have a look at the cash receipts in the past. So a few quarters we have seen at $1 million. So back, in fact, let's do a really quick. I'm going to do a really quick chart for this company. Copy. You'll be able to see that much better than what how I'm going to talk about it. So sometimes words just cannot say what you want to quarter. Receipts. yeah, words just sometimes are not enough. So this is the company's receipts history going back to March 2021. So this is 3 years of history right here. And we don't have what I want to see, and that is growth in receipts. And it's fairly lumpy. In fact, you could say receipts have been going down. So this company still has a massive market cap. Was it 200, 300 million? I'd say 300 million maybe. No, $500 million market cap. And still only $90,000 of receipts. So there's no reason to be at all interested in this company unless it proves to the market and proves to me that it can grow receipts, it can grow its revenue, it can grow. And that's, at this point in time, it can't show me that. It just hasn't proven that. The chart has been interesting at times in the past few months. So when I mean interesting, we saw this really good run up in the share price back in February. Look at that run up. But that was really on the back of nothing. Nice volume coming through. And I think that really put the end, that was the end of the downtrend. So well defined downtrend because the company is not growing at all at this point in time. A lot of promise, a lot of potential. But again, this is just a story stock. And I'm trying to get out of believing this, not believing the story, but being optimistic about stories because most of these stories never come to fruition. They never materialize. And that's what I have seen over the last 15 years. And it came to a harsh reality to me when I looked at the performance of all these different sectors that story stocks, these type of companies, are not what I do well in, are not, have not performed well for me. It's all the other companies that do well for me. These sort of companies do not well unless I trade them. When I trade them, I do okay, but not when I hold them for the long term because eventually the story is going to peter out and the story will just run out. We'll finish in the middle of the book or it won't get to the end. Some of them doesn't even get past the first chapter. Well, that's some of these story stocks. The first chapter is all that it's all it wrote. They've had a very exciting first chapter, full of thrills and chills, and really exciting, but they can't get to chapter number 2. And I'd say Brainchip is still in chapter number 1. Okay, coming in number 1, we have Megaport. What is the share price doing? Down 1. Oh, this is really interesting. Okay, so I have been following the share price movement of Megaport today. It's been really intriguing. So they released an upgrade, EBITDA guidance upgrade, and an operational update. So obviously this company is not releasing an Appendix 4C because they've been operating cash flow positive the last 4 quarters. So instead, they're doing this update. So whenever I see upgrade, I'm going to be interested. And as soon as I saw upgrade for this company, I went, this will be announcement number 1. Not sure which way the share price was going to go, but because this is a guidance or this is an upgrade, sort of like a profit upgrade, the greater chance, if you talk about probability, is the share price would at least open up higher and finish the day higher as well. You see the share price is actually down. So this was a profit upgrade if you think EBITDA is worthy enough of a metric. So they have increased their EBITDA. And that sounds great, but they expect revenue to be about between 190 and 195 million, which is a nice increase on last year, and capital expenditure to be between 22 million. But this was an EBITDA upgrade or a profit upgrade. Now, I then had a look at their investor presentation, and I went, I'm not sure the market is going to like this particular upgrade because even though really nice net cash flow, it was really interesting that in this particular graph here, they had 13.4 million, but 5.5 million was, they mentioned here somewhere in little writing, it's a one-off net receipt. So take away that 5.5, still about $7.9 million of cash flow, but not much higher from last quarter. But when it comes really interesting is EBITDA, and they've got the last 2 years here of EBITDA. And EBITDA actually in this quarter was down from the last 2 quarters. So I was seeing this and I saw this and I went, there is a possibility the market might think the growth has come to an end for Megaport based off the EBITDA in the last 3 quarters. EBITDA is now going backwards. Nice growth in annual recurring revenue, so it continues to grow. And then there's all these other metrics that, and very small growth, but that's been fairly typical for this company. If you look at quarter-on-quarter growth, a lot of times it is small growth, but then you have a look at the year-on-year growth, and it's okay. But I just kept on going back to this EBITDA, and it is actually down in this quarter from the last 2 quarters. So not surprised the share price is down, but it's had a wild day today. So let's have a look at the chart for Megaport. And we're going to have to look at the 1-minute chart. Okay, so particularly that first hour was wild. Share price did open up. So in that first minute, it was only up 1.5%, but it opened, share price opened at $14.66. No, wait there. $14.86. Within the next 12 minutes, no, 8 minutes, share price had fallen from $14.86 to $13.20. Yes, in 8 minutes, it fell. $1.60. So it fell by about 13%. I'm just doing rough calculations in my head. I could be completely wrong. Where's my calculator here? So it fell $1.60 to $13.20. So $1.60 divided by 1480. Oh, 11%. So it fell 11% in 8 minutes, and you can see this fair bit of volatility after that. But the share price has been gradually rising since the first hour, which makes me think I wouldn't say there was panic selling, but I do think there was some weird selling in that first hour. Someone, maybe an institution, just didn't like the report, and once they've cleared out of the registry, the share price is now going back up. And I wouldn't be surprised to see the share price of Megaport go back higher, get back up to beyond $15. Yeah, it wouldn't be surprising to see, just based off the reaction today and the continual rise in the share price. So interesting day for Megaport. So I was looking forward to their Appendix 4C, but it looks like they would not be releasing it this year. So quite a few other reports that I'm not going to get to. I'll just talk about Multistack. MSI, up 250%. Why am I not talking about this? So the first buyer is at 0.5 cents. The first seller is 1.3 cents. There was one sale today, one trade at 1:29 p.m. 2,000 shares traded at 1.4 cents. So $28 worth of trades. The previous trading day, which was the 23rd of April, so this company doesn't trade all that often, the share price was at 0.4 cents. So someone just had to buy 2,000 worth of shares today, just like they did on the 23rd of April. So there's no reason why I should be discussing this, even though share price is up 250%. It was just one trade. And there was a few other. I want to talk about BetMakers, Boss Energy, Metro Mining, Veeam, but I'm running out of time. And so, and Star Entertainment Group, Strike, Pacific Smiles, Wingara, so many companies I want to talk about, but I'm running out of time. So I'm just going to go to charts. First chart is Integrated Research. Hopefully the share price is up still. Share price is breaking out. I mentioned share price is breaking out in my technical analysis video, and I think this almost is confirmation. Share price is up down to 43 cents. So things are looking good for Integrated Research. I also wanted to talk about C79, Crisis Corporation. I've talked about this company in the past, and I was expecting a little bit of bounce with this company. And if we look at the 1 hour chart, we have seen the bounce, pretty violent bounce, but look at the volume, decreasing volume through the day. I think this bounce is running out of steam fairly quickly. So I expect the share price to go back into a downtrend moving forward. Doesn't mean it will, but that's my expectations for this company. And we'll finish off with Mesoblast. So Mesoblast is a 1 hourly chart, looking pretty good. Yep, nice little dip down to 72 cents and back up. I would like to see higher volume, but there's been nice volume today for Mesoblast, increasing volume from what we've seen now the last few days. I wouldn't be surprised to see traders or day traders in this company right now getting back up past $1, which has been a very important level for this company in the past. Okay, and that's all I got for today's video. If you want anything discussed when it comes to all these companies I could have mentioned that could have made it into the top 5 announcements of the day, just leave your question, your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.